Welcome to the deep dive.
Hello. This is where we try to give you that shortcut to understanding some pretty complex issues.
Exactly. We take a whole lot of information just for you, really boil it down to the essentials.
And today we're focusing on the global picture, socioeconomics, geopolitics, the whole lot.
Yeah, and we're doing it through the lens of a very experienced trends forecaster, someone with 45 years in the game.
Right. We're digging into an interview with Gerald Celente. He's the publisher of the Trends Journal.
It's easy to get overwhelmed, isn't it? So much info out there.
Totally. So our job here is to pull out the really critical bits, the core insights from his perspective.
Give you a clearer view on what might be shaping things.
And he flags some big areas, potential wars heating up Iran, maybe India, Pakistan too, economic wobbles, gold prices are doing crazy things, another potential dot-com bust, real estate issues.
And just the general shift in, well, who holds the power globally?
Okay, so where should we start? Maybe the geopolitics.
Yeah, let's unpack that. The forecaster seems genuinely worried about conflict spreading.
Especially involving Israel and Iran. He points to the recent bombings, Lebanon, Gaza, sees them as danger signs.
And he even mentions something quite specific, doesn't he? This idea of a false flag event.
He does. It's this concern that something could be staged, basically.
Yeah.
Made to look like Iran did it to, well, justify a bigger war.
That shows a real level of skepticism about official stories, especially in a crisis.
Definitely. And it's not just the Middle East. He looks at India, Pakistan, too.
Right. The recent incidents targeting airports, that S-400 system.
Yeah. And he frames it as, look, this isn't new. This tension has been there pretty much constantly since the British left in 47.
Gives it historical context.
And reminds us about the immense human cost during the British occupation. Just how deep these roots go. It's a fault line, really.
It's also interesting, he brought up the internal situation in Israel before October 7th.
The protests about judicial reforms.
Yeah. It's a reminder, isn't it? Internal divisions can, well, they can make a country more vulnerable, perhaps, or change its calculations.
That's a really good question. How much do domestic politics affect foreign policy decisions or susceptibility to conflict?
Then looking wider in the Middle East, he's quite critical about Yemen.
Very. He takes it back to 2014, Saudi Arabia going in, points out the U.S. refueling support, intelligence sharing.
And despite talk of deals, he says, well, reports suggest the fighting hasn't actually stopped.
And this sort of feeds into his, let's say, deeply cynical view of governments generally.
He uses that phrase, crime syndicate.
He does. It reflects this profound distrust, this idea that power and self-interest, well, they often trump the public good.
Okay, let's shift gears. The economy. Another area where he sees potential storms brewing.
Big time. Gold prices, first off. He highlights this huge surge.
And mentions he got into gold himself way, way back, 1978.
Yeah, and his forecast for this year is pretty startling. Maybe even $5,000 an ounce.
Wow. And why? What's driving that, in his view?
It comes back to the uncertainty. Geopolitical risk, economic instability. He sees those as the main drivers. And given he's watched gold for so long.
His perspective carries weight, yeah. He also notes something interesting.
What's that?
That the mainstream media isn't really making a huge deal about this gold surge.
That is interesting. Makes you wonder, what stories get amplified and why. Are certain warning signs being downplayed?
Maybe. Then he talks about tech stocks. A potential dot-com bust, part 2.
Right, like 2000 all over again. He links it to possibly inflated AI stock valuations.
Mentions DeepSeek versus NVIDIA as an example.
And China's advancements in AI suggesting maybe the U.S. dominance isn't guaranteed. He thinks a market correction is coming.
And he did call the 2000 bust, apparently. Gives him some credibility there.
For sure. And if that bust happens, what does the Fed do?
Likely lower interest rates, right.
Probably. Which could weaken the dollar further.
And a weaker dollar often means
higher gold prices. So you get this potential feedback loop.
Adding to the pressure, he points out the U.S. Treasury needs to borrow a lot more money.
Yeah, those borrowing requirements are way up, which naturally raises questions about, long-term debt sustainability, inflation risks too.
Which leads to a pretty provocative thought he raises. Could the government try to, well, manage the debt by messing with gold? Or introducing a digital currency?
He brings up FDR in 1933. The government basically confiscated private gold, then immediately revalued it higher.
A historical precedent for major intervention.
Exactly. And a central bank digital currency, Well, that's another potential tool, isn't it? More control over finance, maybe a way to handle debt, but it raises huge questions about privacy and freedom.
And he doesn't think the official debt numbers tell the whole story either.
No, he suggests the real debt, if you include things like unfunded promises for Social Security, Medicare, it's vastly higher.
It's complex to get a true picture, isn't it?
Absolutely. Official figures often don't show those long-term obligations.
Globally, he also looks at China buying up gold. Lots of it.
Yeah, building up reserves. And what that might mean for the yuan versus the U.S. dollar.
He sees the dollar's dominance slowly eroding, points to BRICS nations trading more in their own currencies.
It's a slow burn, that shift.
Yeah.
But countries accumulating gold, it's a clear signal. They want, less reliance on the dollar system.
Okay, what about oil? That's always crucial.
Right now, he notes prices are actually down a bit, even though OPEC cut production. He reads that as weak demand globally.
But he has a warning there, too.
A big one. If conflict breaks out properly between, say, the U.S. or Israel and Iran, he predicts oil could spike dramatically, over $120 a barrel.
And the consequence of that?
Could crash global markets, he warns. A major shock.
He contrasts it with 1973, though. Back then, Arab nations used the oil weapon during the Yom Kippur War.
Yeah, the embargo, he doesn't see that happening now. Suggests maybe economic ties are overriding those older political alignments.
Priorities shift over time.
They certainly do.
Okay, another big economic area he flags. Commercial real estate.
Yeah, this seems like a slow-motion crash, maybe? He points to office vacancy rates, up to 20% in major U.S. cities.
That's huge.
It is. Especially with so much debt tied to these buildings coming due for refinancing soon.
And remote work isn't going away.
Exactly. Plus, he makes the point that converting these modern glass towers into apartments, it's often not feasible or incredibly expensive.
Mentions a building sale in Midtown Manhattan, right? Sold for pennies on the dollar, essentially.
A stark example. He thinks the real pain from this might hit around fall of this year.
So could things like tariffs on China maybe help spark some reindustrialization, fill up those empty buildings?
He seems doubtful about using office buildings for manufacturing. The spaces probably aren't right.
But he's not totally against tariffs, is he?
No, he supports them partially. He blames deals like NAFTA for hollowing out U.S. manufacturing in the first place.
But recognizes the current job market reality.
Right. Lots of lower-paid service and healthcare jobs now. Manufacturing is a much smaller slice of the GDP pie than it used to be.
And on U.S.-China trade generally, he emphasizes the unpredictability.
Yeah, policies can change fast. Hard for businesses to plan. Creates a lot of uncertainty.
Just quickly touching back on geopolitics, there's chatter about Trump potentially visiting the Middle East soon.
Yeah, speculation about what that might mean. Announcements, deals, mentions Trump's sons having business interests there too.
And he contrasts the sort of quiet stance of Saudi Arabia, Qatar, the UAE on Gaza.
With Yemen's more active resistance, yeah.
He also has that view, doesn't he, that if Trump were still president, the Ukraine war would be over.
He does believe that, though he also points out Trump's strong pro-Israel record, financially and politically. It's a complex picture.
Yeah. He also draws a historical parallel that's, well, a bit chilling.
FDR in Japan before Pearl Harbor.
Exactly. The asset freezes, the trade restrictions. He sees echoes, potentially, in current tensions. A reminder that economic warfare can sometimes precede actual warfare.
It's a sobering thought. Actions have consequences, sometimes unintended ones.
Which brings us to his final, really crucial point.
Critical thinking.
Yes, he really hammers this. Seek out different perspectives, different news sources.
Mentions looking at sources like, Haaretz, Jerusalem Post, but also IRNA from Iran, Arab News. Get the full spectrum. Don't rely on just one narrative.
And Singrak says that's what the Trends Journal tries to do. Present facts, diverse viewpoints.
Which is vital, isn't it? In this age of echo chambers, getting multiple angles is key to, well, actually understanding anything complex.
So, wrapping this deep dive up, we've covered a lot. Escalating conflicts, potential ones anyway.
Major economic worries, gold, tech stocks, real estate, big shifts in global power dynamics. It's all interconnected.
And for you, listening, wanting to get up to speed quickly, wanting those aha moments.
Seeing these connections, how geopolitical tensions affect gold prices, how trade policy impacts jobs. That's where the real understanding comes from, right?
Absolutely. And remember, this analysis, even from an expert with decades of experience, it's presented to help you think.
To form your own informed opinions. Do your own digging, too.
So the final thought we want to leave you with today is this.
Given all these potential bumps in the road, economically, geopolitically. What does being prepared actually look like for you?
Are you thinking about the long-term impacts for your finances? Yes, but also just for navigating the
Are
world.
you diversifying not just investments, but your sources of information too? Are you actively questioning the narratives you hear? Something to mull over.